To review the week in the equities market, joining us now is Elvis Otunta, MD, Norrenberger, Securities, joining me right here in the studio. Great to have you. Good evening.
Yeah, hi, Laddie. Good evening, and good evening to viewers.
Good to have you spend your weekend, with us at this point.
Just Laddie could drag me down here.
I know. Yeah.
Great.
So it's another big moment also for Nigeria. We see the Dangote Refinery now commencing operations. How do you see this, impacting the stock market? And I'm looking at that oil and gas counter. What are we expecting?
Okay, great. Fantastic news. We woke up to a couple of days ago this week where the long-awaited, Dangote Refinery production really, taking off. And also this has been a long time coming, right? And we've seen a whole lot of activities around the, movement of crude to the refinery, because that in itself had been also a challenge, having crude supply. But in the course of a few weeks ago, we got to see about 6 million barrels of crude hit the refinery, and the refinery has kept Dangote Dangote Refinery has kept his word of telling us by January 2024 that we will get production, and this is happening now. Now, this is significant because we're looking at a refinery first that is the largest single train refinery in the world. In Africa, you're talking about the largest refinery, and this also has, like we know, a 650,000 barrel per day capacity, production. Now, this is interesting because about 450,000 barrels, 400 to 450,000 barrels production would meet our domestic needs. If this happens, like we are sure it's going to happen, right? It then suggests that the issues around importation of refined products now is taken care of to a large extent. We've already seen conversations around the oil marketers wanting to discuss, supplies enough of the refined produce from Dangote. So what this then does for the economy as a whole is you're going to be having a reduction, if not a complete elimination, of the FX demand you've got for importation of refined petroleum products, of which, of course, PMS has been the biggest problem there, really. So that then means we're having savings coming from the FX reserve side. And if this were to happen, it then suggests also that other critical sectors of the economy that have genuine needs for this FX, probably to import machinery and, some feedstocks for their production. So we're talking about the manufacturing companies and the likes. Now they would have access to it. Bringing it home to our market.
Right.
How does this impact the stock market? In several ways. One, first, is the savings we're getting first from not having to use our scarce dollars, right, in importing crude, is a savings to the CBN, right? So our reserves, would look healthy.
Right.
Then from the export of over 200,000 barrels refined produce, meaning there's going to be some dollar earnings, FX earnings too, to the country. So our reserves would be the better for it, because then it shores it up. What it also does then is it gives some comfort to foreign portfolio investors who, prior to now, have been very cautious in our market, because they come in to invest in your market, exiting their position, right, and taking out profit is always a challenge, right? After taking out your profit, you're having FX scarcity, so they lose whatever they've gained in the stock market, they lose in FX exchange rate differentials. What this then does for us, because we're saving a whole lot, it means they could easily access the official exchange rates, right? At the CBN. And so this helps. Then for the oil and gas counter, already Dangote, in one of his interviews, right, with Financial Times a while ago, has said once the Dangote Refinery comes on board, he intends getting it listed on the stock exchange.
Right.
Dangote, we believe his words because he's somebody who has done this over and over again with most of his companies. So he just doesn't keep it private to himself. He usually would get it listed, and that would help deepen our market. It increases market depth. It also would help. What this does basically is you're saying now the rest of the investing public, you could come partake in, you know, the perks and all of what the refinery comes with. And we know Dangote, if his pedigree is anything to go by, his companies are well run. So once the company or the refinery gets profitable, then investors will key into the equities, the stocks of Dangote Refinery would also be better off for it.
Yeah, and I'm also, you know, hoping, you know, when I go to the pumps, you know, at some point, I'll be able to get, you know, fuel for cheaper because when they start producing, you know, PMS, I'm going to be going to the pumps and I'm going to be saying, I want Dangote PMS at this point. Hopefully, it's going to be cheaper.
Probably.
Hopefully, you know, I'm hoping. But, you know, looking at the market, you know, generally, this week was quite the week. You know, and the year is already looking so good, you know, for the equities market. We're like the second best in the world, you know, at this point, followed by Argentina. When you look at both countries, you see that economically, these countries are going through a lot.
Struggling.
How do we...
Yeah.
How do we merge this?
Interesting question you have there, right? And we get to hear a whole lot of this when we get to engage our clients, right? Especially for the ones who are a bit pessimist about the stock market. They keep telling you, you tell us the stock market is doing so well. Yet, my standard of living isn't measuring up and all. I see the country struggling. So these are very valid concerns, right? And more so when we're told that the stock market also is the barometer of the economy.
Right.
So when the economy thrives, or rather when the stock market thrives, it reflects how good the economy is. However, Nigeria has been a largely oil-dependent nation. That fact still stands, right? And then the question is, how has that sector really played out?
You know what? You know what? Yes. We'll take a quick break now.
Oh, fantastic.
Yeah, when we come back, we're going to get more of your thoughts on how to marry this, you know, at this point. The rallying stock market, and you see the economy, the macro is not looking so good. We'll continue the conversation right after this break. Just stay with us. This is Capital Market. Welcome back. Well, we've been reviewing the market performance for the week right here with the NGX All-Share Index still continuing that bullish sentiment we saw in 2023 into 2024. I still have with me right here Elvis Otunta, MD, Norrenberger Securities Limited. So thank you for staying on. And you were trying to make us understand, you know, why I would see a rallying stock market. But when you look at the macros in the economy, you're seeing inflation all-time high, seeing currency devaluation at this point. We're seeing a weakened Naira. And if you take it to Egypt, you know, the EGX 30 in 2023 did perform really well, over 60%.
Yeah.
But what I heard there was investors were using the market, the EGX, as a hedge against currency devaluation and, you know, the weak macros. Is that what's playing out here in Nigeria?
So not necessarily, right? So I'll still go back on the, you know, my trail of thought, right? So we've had a disconnect between what's happening in the real sector versus, you know, the markets, right? So what we've seen is, because, and if you recall, this rally you've seen in the market hasn't just been for so long, right? We've gotten this, this happened post the 2023 general elections. Now, what we've seen here is the president, probably strategically, made pronouncements that were pro-market. The market had always wanted, you know, a unification of the exchange rate. It had always wanted, you know, a very strong stance on the whole fuel subsidy issues, right? There has been a, you know, a guzzler of our nation's resources. They also wanted to hear things around how you were going to tackle inflation and the likes. Now, all these are real issues. They still stand. But the government's pronouncement and subsequent actions around this has given the market extra comfort. This sounds good, this looks like this president can take some hard decisions, and the market hasn't always wanted to see, some inconsistencies and the rest. Now, all these things buoyed positive sentiment towards the market, and so you see the market rise. But the flip side to it is, for every of those decisions made, especially the fuel subsidy removal, the petrol subsidy removal, it had its own adverse effect on the economy, the real economy, because everything in Nigeria, basically everything, is hinged on, petrol, pump price, and the rest. So what we saw as a fallout from those policy statements was, rising cost of goods and services. So inflation shot up to, all-time high, now up over 28.7% region. You've seen also your exchange rate, gone to, unbearable levels for the average.
Even at the official window, crossing that
yes,
1,000 level again.
Yeah, again, exactly, right? Now, this is also an import-dependent nation. So everything the average Nigerian has to spend is still dependent on, getting these effects, getting what the exchange rate is, because it's imported goods and all. So this in itself has taken a toll. So what we see here, right, is while we commend the government of the day for those pronouncements that have helped the market, and mind you, we think also there's some hot money too coming in, right? So, and this I can easily, show you from the numbers when you check the participation of the domestic investors versus the foreign portfolio investors in our market. It's actually increased over time, right? And so that tells you these foreign portfolio investors are looking at your market. It looks attractive. The returns for them are significant enough to, hedge whatever FX losses they might make also, right? So they'll come into your market. And that, for us, we think is still going to continue going into the next quarter and probably till half year, right? However, the government needs to still tackle the real issues: fiscal discipline. You need to tackle corruption. You have to tackle issues around oil theft, okay? Because since we depend so much on oil, then the leakages we're having due to oil theft has to be tackled, and a host of other issues.
While rejoicing, that the equities market is doing so well, we shouldn't forget that those macro issues
still persist,
not allowing you to enjoy all those gains. Let's look at the financial services stocks now. They are still the ones pushing this market, at this point. If you look at the Fugas, almost all of them are now swoots.
Oh, yes,
they're now stocks worth over
$1
trillion, at this point. Talk to me about, these banking stocks, and is this sustainable, this rise that we're seeing at this point?
Okay, so for interestingly, right, we've seen this happen over and over and over again, this rally where the banking sector has always been the major activity driver, right, in the equities market. So what we're seeing now isn't new to us, right? But what was interesting in the week was the fact now that you had, out of the Fugas, right, which is the First Bank and the UBA, the GT Co, Access Bank, and Zenith, what we saw happen in the course of the week was that the likes of a UBA, the likes of an Access Bank, and First Bank, actually crossed the 1 trillion naira market capitalization, which had just been, amongst the Fugas have just been the GT and Zenith. Now, investors naturally, and that's our market, right? I've always had this affinity for banking stocks. And just take a look at the financials, right? So their fundamentals also speak and support why this affinity for banking stocks is, right? And then, of course, everything that happens in the sector, in the economy rather, would always derive its source also in terms of financial, must go through the banking stock. So if we were to look at quarter on quarter, what these banks have pulled out, as a Q3, most of these banks we have here, right, especially the Fugas, had exceeded their full year, results same time last year. So what this says then to investors is full year Q4 2023 would exceed expectation, and as such, the dividend expectations too from investors. And I hope these banks really understand that the market is expecting some very decent dividends, right, to compensate for this drive and affinity towards the stocks in the Fugas, right? They can't afford to disappoint when it comes to dividends. And you look at the likes of First Bank, particularly, a whole lot has happened around First Bank. You know, the acquisition of majority stake by Femi Otedola, who most people see as a very shrewd businessman, you know, a very good businessman that everything he touches turns to gold. Now, this is going to be a very critical moment for First Bank particularly. And I say this because while First Bank has been one of the biggest banks and has done fairly well, but over the years, its dividend payout has not really matched investors' faith in it, right? So this will be one critical year where we've seen its share price really soar significantly, and then the market will be saying, you know what, at this point in time, we think it's only right for you to compensate us. So I believe that was a part of the expectations of the market that's also driven price.
So we'll keep watching, and so much, you know, we've unpacked at this point. But very quickly now, what are you seeing for next week in the equities market?
Oh, yeah. So next week, because of the kind of drive and rally we've seen in the past, since the beginning of the year, right? We think there's going to be some profit taking that will happen. It happened sometime this week, right? But one day, and that was when we saw the index dip in one of the trading sessions during the course of the week, right? But immediately we saw it rebound, and the market still closed, you know, up on Friday. So, but going into the week, we think profit taking is still going to happen at some point, right? Because these prices have really moved pretty high, and for those of us in the market players, we think it's not necessarily a bad thing when profit taking happens and prices come down, right? Yeah, we just don't want to see an artificial rise. Yeah, so we think profit taking is going to continue. Yeah.
All right, fantastic. It was great having your perspective today. Elvis Otunta, MD, Norrenberger Securities Limited. Thank you so much.
Yeah, thank you very much, Laddie. Yeah.
All right, that's the show for today. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube and search for Channels Television. Thank you again for watching. I'm Laddie Williams. And remember, if you must sell, find the top.